Hello, everybody. It's Andrew from Stop Money Lizards, and today I'll be giving you an update on what's going on in the Bitcoin price. Before we start, I'd like to talk about what exactly this video will consist of. We're going to delve into the relative strength index. Then we will move into the deMark indicator, which is an indicator that measures price versus time to identify momentum. We'll then talk about cycle trend changes and how this can help us in the current environment. And finally, we'll talk about the DXY to see what is happening on that front. The RSI. Let's begin with the RSI. I have gone to YouTube to get some really good animations from a video that will be listed in the descriptions below on how to use the relative strength index. The RSI is a technical indicator that compares the magnitude of recent gains to recent losses in an attempt to determine overbought and oversold conditions of an asset. It is calculated using a simple mathematical formula that compares the average gains to the average losses over a specified period of time, typically 14 days. The RSI oscillates between 0 and 100, with values above 70 indicating an overbought condition and values below 30 indicating an oversold condition. This information is useful to traders and investors to help identify potential buying and selling opportunities. And it's important to note that the RSI is just an oscillator and an indicator that must not be used on its own. In addition, it is important to consider specific characteristics of the asset or market being analyzed. The RSI is a popular and widely used technical indicator among traders and investors, provides valuable information on the strength of an asset's price. Let's take an example to make things easy. Imagine you are interested in buying Bitcoin at a certain price level, but you're not sure if the current price is a good deal or if it's overpriced. You decide to use the RSI to help you make your decision. The RSI is first calculated using a 14-day period. You look at the stock's closing prices for the past 14 days and calculate the average gain and average loss over those 14 days. So let's say, for example, we have the past 14 days where the stock has gone up for 8 days, where it's closed higher than those previous days, and 6 days where it closed lower. You then divide the average gain by the average loss and multiply by 100. This gives you the RSI value, which in this case is 70. A value of 70 indicates that the stock is overbought, meaning that its price has risen too much, too quickly, and may be due for a correction. This information can be used in combination with other indicators and analysis to help you make a decision on whether to buy a stock or to enter Bitcoin or wait for a better opportunity. So where are we at the moment with Bitcoin? With the current understanding of what the relative strength index is and how it can help us enter and exit markets. So let's look at the daily time frame. On the daily time frame, we can see that the RSI is at a very high level of 98, which basically means that on the daily, we seem to be overbought, and maybe this is why we are starting to experience a bit of a downward move. If we look at the weekly, however, the weekly is hovering between 40 and 35. Arguably, the weekly is looking healthy and it is looking in a good position to keep on rising, which should signal higher prices. If we look at the monthly, the RSI typically on the monthly is a strong indicator when Bitcoin reaches a low. As you can see, in November of 2018, Bitcoin was on the floor at 4, with the RSI being completely oversold. And the response from that RSI was to eventually go up to basically set us up for this move up to in this case 12k euro, 14k USD, to then go back down to the 42 mark and continue to rise before reaching its high and on the RSI on the 1st of April of 2021. So if we want to just see what happened on the 1st of April 2021, which corresponds with this level of RSI, it matches quite accurately to the first top we experienced in April, somewhere over here in April. So historically, the RSI is a good indicator to signal to investors and traders when the market is losing steam and is in a position of either an overbought or an oversold territory. Where are we at the moment? So Bitcoin has currently hit a low that corresponds with the low of 2018. So the indicator is suggesting that there is only one way to go, and that is up. So assuming that the RSI is signaling a bottom, then prices should not come down too low. If we look at the weekly once again, we are looking healthy. If we are looking at the daily, it is high. However, the RSI on the daily doesn't really have so much weight to the grand scheme of things when we look at where the price of Bitcoin wants to go. I'm now going to talk about the deMark indicator. So the deMark indicator is an indicator that is more or less for the experienced. However, if you have never heard of it before, please take the time to listen. I think you'll find it quite interesting. The deMark indicator, also known as deMark, is a technical analysis tool developed by a market technician called deMark, also used famously by a legendary trader in this space, Tone Vays. This indicator is designed to help traders and investors identify potential market turning points and trend reversals. The deMark indicator is based on the concept of deMark exhaustion point, which is a point in the market where buying or selling pressure has been exhausted and a reversal is likely to occur. Essentially, what it is saying is that the deMark indicator will use price, it will use time to plot these numbers that you are seeing here, and those numbers are able to explain to us when the market is exhausting to the downside or the market is exhausting to the upside. Now, how can we use these numbers to better understand how to identify these exhaustion points? The deMark indicator uses a specific counting method to identify potential market turning points and trend reversals. One of the key features of this indicator is the use of a 9-count threshold. The 9-count threshold is based on the idea that market trends and reversals tend to occur after a certain number of price movements, and that these movements can be counted and used to identify potential turning points. The 9-count threshold is used to identify exhaustion points in the market where buying or selling pressure has been exhausted and the reversal is likely to occur. deMark believes that 9 is a key number in market analysis as it represents the maximum number of price movements within a trend before a trend change is likely to occur. He also believed that this number is in line with the Fibonacci sequence and the Elliott wave theory. It is important to note that the 9-count threshold, however, is not a set rule and it can be adjusted depending on the specific characteristics of the market being analyzed and the trader's preference. Additionally, the use of this indicator should be combined with other technical analysis, as we always say on Stock Money Lizards. Now, with that knowledge, what can we see in the current price? So, let's just go back and let's try and find this 9. So we are currently looking at the weekly and we are trying to spot points where our 9 was seen and what happened after. So we had a run up on the 20th, on the 6th of April 2020, and we hit a 9. And on that 9, we sort of consolidated before moving out, breaking out of this megaphone inverse falling wedge, which we discussed in previous videos. We then broke out and we hit a 9, and the preceding candle was 1 that remained in this area for a full week before then pushing back up, where it got a 2 above a 1, signaling a bullish move to the upside, where momentum is actually not exhausted, but actually there is more momentum in the market to keep on going up, hitting a 9 weeks later on the 1st of February 2021, with the price spiking up to this level of 34k in euro. Apologies for not using the USD. And then finally making another attempt for 9 more weeks to hit the high at a phenomenally close rate to the actual top of Bitcoin price movement. So if we look at a bullish environment, what we're seeing is when you have a 9, you have the potential to consolidate in an area. And the week that precedes that 9, in this case, the 2, it's important for that to be above the 1, signaling a continuation in the momentum. So we hit a 9, we then hit a 1, and we hit a 2, extremely bullish candles taking us up all the way for another 9 weeks, before then consolidating at the top, realizing we must go down. Same concept applies on the way down, a 2 below a 1. And then we hit a 9 ultimate low at roughly this level, which we can say was the base of this first initial fall. Now, in this case, we ran up for 7 weeks. We didn't actually complete the 8 or the 9. We continued running up for 7 weeks and we didn't complete the 8 and the 9. So what that's basically saying is that while sometimes it can be quite accurate, we also have to account for the fact that we might not complete the full cycle of 9s. But that's fine, because on the rundown from this particular fall in November of 2021, we ran down for 9 more weeks, consolidated at this area where we were assuming that we were exhausted from the downside, but to be fair, we didn't really get a bounce. But what we did get for a number of weeks is consolidation in this area. We were rejected by this resistance line of this giant falling wedge, which we discussed in the previous videos. We made a hard downward move following a similar pattern to the previous downward move, hitting a 9, consolidating at this area, and now we've just reached a level which is coming close to the end of the giant falling wedge. So how can deMark help us today? So we are currently have been flip-flopping from one bullish week to one bearish week, one bullish week to one bearish week, and now we've hit a 2 above a 1. So what does that basically tell us? These two candles look super strong. Why? Because the body is large. The body is large. This wick was shadowed now by this body that shows strength. So on the weekly, there is no reason to believe that we shouldn't have a bullish week coming into next week. Also, we're currently breaking above the 20-week moving average, so there is no reason to believe that if Bitcoin holds this level for a third week, ranging from this price down to the moving average, it cannot continue that bullish trend of 9 consecutive weeks in a row of upside. If we look at the monthly and we go back, what we can see here is in similar fashion to the 2020 run, we hit a 9 on the monthly, consolidated, ran up for 9, consolidated for a month. We had a bullish 2 above a bullish 1, ran that up for another 9 months, for the Tom DeMark indicator to identify the top quite brilliantly. Now, what happened after that? We hit a 9 on the way down, and then we sort of kept on going down with that exhaustion phase, but setting ourselves up for a move for 4 bars. That is 4 individual months. What happened after this move? We had 2 go above a 1, and that took us up for the first 9. And then we exhausted ourselves to the upside in 1, 2, 3, 4 counts. So the interesting thing is, on the downside, we hit a 9 and we went down by 4. On the upside, we hit a 9 and exhausted on 4. So where are we at the moment? We are coming down from this level of 1 to the 9, and we're currently on a 4. So we now know that the RSI is at a low. We know that the Tom DeMark indicator is on a 4 after an extensive downward move to the downside. We won't talk about Heikin-Ashi candles, but this is a Heikin-Ashi candle that is showing signs of reversal, which is super, super bullish for the pattern of how Bitcoin should move in the next weeks and months. So from a monthly perspective, the Tom DeMark indicator is interesting to signal a potential bottom is in. From the weekly perspective, there's no reason to believe that we cannot go up for 7 more weeks. And on the daily time frame, we had 9 consecutive days. We had a bullish 2 above a bullish 1. Took us up for 8 days, but this current day, which is the 9th, is signaling that we should go down. Now, we know that we can correct from 1 to 4, which basically means that today is Thursday, 19 January, Friday, Saturday, Sunday, and probably Monday, we should have our first bullish move to take us upwards. Now, how far down can we go? I wouldn't like to go further down than I would say this level. So we'll keep track of this level. And the reason why I have chosen this level is because it falls closely in line with this base over here and the wicks that wicked all the way down. Also, Bitcoin has a tendency to go up in one move, consolidate in one area, and move up to consolidate in that area, and then it will decide whether it wants to go up or it wants to come back down and close this gap. Gaps are something which we will talk about in future. Now, if we look at this example, Bitcoin runs up. I'll remove the Tom DeMark indicator to make things easy to look at. So we ran up, consolidated in this area, ran up, came back down, closed the gap, ran up, consolidated in this area, ran up, hit the ultimate high. After this, it was bearish mentality. Bearish mentality. But even to the downside, it went down, consolidated in this area. It went down, consolidated in this area. So assuming that now we are in a bull market, or signs that we might be in a bull market, what we might expect is a run up, consolidation in this area, and another run up, and then we will see what happens in this area, if we can hold it or if we're going to come back down to these levels. So this was a little bit of technical analysis, which I would like to continue discussing in future videos, mostly because the Tom DeMark indicator is a really good way to signal where we are momentum-wise in the market. And so we'll be keeping track of this. Now, before we end this video, I would just like to have a short discussion on cycle trends. So, before ending this video, I would just like to have a brief discussion and make reference to a really interesting and informative chart on a cycle pattern, which is essentially accumulation, markup, distribution, markdown, rinse, repeat, accumulation, markup, distribution, markdown. So, just as a brief introduction on cycle trends, a cycle trend is a pattern that happens in the stock markets over time. It happens in seasons from summer to winter and happens throughout the day from morning to night. Cycles are all around us, playing out every single day. So they show up when the market might go up or down. By understanding these patterns, traders and investors can make better decisions and make more money. These patterns can be short term, medium, or long term, and can be caused by different factors like the economy or people's emotions, ranging from interest rates, recession or not. It's important to use these trends with other information and just not rely on them alone, as we always say on Stock Money Lizards. Now, to give you an easy example as to understand this pattern and help identify what's going on, when people buy stock or a house, it's called accumulation. So it is this level over here. It means that more and more people are interested in buying that stock, which can make the price start to go up. This is like when you are buying a property, more and more people start buying properties in that area, driving up the price, leading us to a markup position. This is like when you purchase a property at a lower price and later resell it at a higher price. So you saw property in a certain area at an affordable price. You notice that more and more people are buying in this affordable price. So those that bought it over here put that same house back on the market and sell it all the way up to these price levels. When we get to this area, we call this the distribution phase. This means more and more people are interested in selling that house in this particular example, which can start to push the price down in the same manner started to push the price up. This means that when more and more people are interested in selling that stock or that house, it can make the price go down. This is like when you own that property we're just talking about, and more people in the area are putting their properties up for sale, driving down property prices. When the price of that stock goes down, it's called a markdown. This is like when you own a property and you have to lower the price to attract buyers. When finally, in short, you end up back to an affordable property environment and the cycle will repeat. Now, just jumping back to the Bitcoin Euro chart. Once again, sorry for not using the USD chart. I'm just used to Euro. This feels a lot like accumulation. This feels like markup. This feels like distribution. And this feels like back the downside. This feels like accumulation, identified in the stock money chart over here, pushing up the price to find a markup, identifying a range, which is this entire range of distribution, where the market is figuring out if it's time to sell or not, which ultimately push the price down to these levels. And what we can identify is that we are showing signs of accumulation phase. As we saw in our previous video in the MVRVZ score, the on-chain metric, which is signaling that we are in the accumulation phase. Also, looking back at how we start this video on the RSI, showing us signs that it only has up to go. On the weekly, we are in the somewhat middle, so we have signs of up to go. If we look at the deMark indicator, we are looking good with a 2 above a 1 for 7 more consecutive weeks. And on the monthly, we seem completely exhausted to the downside, which makes sense when you compare it to the RSI. As a final rundown today, I'd like to have a look at the DXY. Now, We just spoke about the deMark indicator, and it's never been so accurate like it has been in the DXY. So if we go back 1000, if we go back to this level, 2015, it's sort of identified an area of consolidation. We look at a 9 being hit over here, a 9 over here, and you can see that here price, it does tend to stop going down for a particular moment in time, allowing you to understand what to do next. Same for this area. We got a 9, a second bullish 9, a third bullish 9, and then we consolidate in this area. 9, 9, the 9, calling the top over here before we consolidated, following 9, calling us the final top of a 9. So where are we at the moment? If we look at the DXY, what we're seeing is 9 consecutive weeks of downside, and we're currently on a very ugly fourth candle. This candle looks way, way different to this candle. Why? You have the candle wick at the bottom, at the top, and a relatively small body, which basically signals that buyers and sellers are sort of fighting between them. Like, should we go up? Should we go down? There's indecisiveness. Unlike the DXY, which is basically quite a solid argument for it going down a further 5 more weeks. So with that being said, it corresponds with our theory that Bitcoin will continue going up on the weekly. And so for the time being, we are expecting that the DXY will also continue to go down and possibly hit these levels of 100. Reason being is because we seem to have some support from 2020, from March to June, which can act as support for the DXY to potentially see bounce to potentially this area. We will keep track of it. This is an important chart that could signal Bitcoin movements to the upside or the downside. I hope you have enjoyed this video today. My name is Andrew from Stock Money Lizards. Please be aware that this is not financial advice. This is purely commentary as to what is going on from our respect in the Bitcoin market. Should you have any questions, please let us know in the comments below. If you haven't yet joined our page, please join our page and subscribe. And if you would like to join our Discord channel, by all means, we have a super community in there and it's a lot of fun. Have a great day. Stay safe.